And as business begins, we continue that story. Italy rolling out the red carpet for the Chinese president. But political leaders both within Italy and elsewhere in Europe are worried about China's growing influence on the continent. Joining us on the set, Yuka Roye. We really did see Italy rolling out the red carpet, didn't we?
Well, we did, and the big topic here is China's Belt and Road Initiative. The massive infrastructure, trade and investment project is slated to improve regional cooperation on a transcontinental level. But concern is rife that Beijing's real aim is to increase its dominance and bring its debt-trap diplomacy to Europe. Xi Jinping and Italian Prime Minister Giuseppe Conte are expected to sign a memorandum of understanding on Saturday, with Italy becoming the first G7 country to join the project. The government is divided on this. Far-right Deputy Prime Minister Matteo Salvini is skipping a planned state dinner, warning that signing up to BRI could lead to the colonisation of Italy. Rome's support for the modern-day Silk Road has also ruffled feathers elsewhere in Europe. On Thursday, EU leaders discussed ways to take a more defensive strategy on China.
Since the beginning of my presidency, I have called for a European awakening and defense of European sovereignty. I would say that on subjects like China, we're finally there. The European Commission's text, moreover, is a really good text, which talks a lot about the challenges and about all the things we expect and must do with China and regarding China.
Well, Italy's agreement with Beijing is expected to see Chinese investment in 4 ports in Italy, Genoa, Palermo, Trieste and Ravenna, and bring much-needed funds for renovation, as Wasim Korne reports.
The port of Genoa is undergoing major changes, among them the extension of its seawalls and the construction of a new cargo terminal. But there is one surprising element to the transformation. China will finance a large part of the project.
It will be the first entirely automated cargo terminal north of the Mediterranean, and it will give China a major access point to Europe.
Italy would become the arrival country for China's new Silk Road. The country would offer up 2 gateways, Genoa with access to France and Spain, and Trieste with access to Central and Eastern Europe. And while investment in Italy may sound like good news, Chinese investment also comes with severe cost reduction methods. This port worker is worried.
This is really negative. That's not a political opinion, but we will lose our national property and identity.
Italy, however, is in dire need of investment, much like Greece, where China has already made massive purchases. The historic port of Piraeus is now under Chinese control, and the activity there has grown 5-fold since the purchase. But it hasn't all been good news for Greece. Alongside increased activity came more workplace insecurity, less pay, and less workers per team. Still, though, Deputy Prime Minister Luigi Di Maio says the deal will benefit Italy.
The deal with China has nothing to do with geopolitics. We just want to make sure the Made in Italy brand can better enter the Chinese market and that of other developing countries.
The EU, though, says it's worried about the business deal. It has asked for increased verifications when it comes to Chinese investment.
And with that, let's take a quick look at the markets now. European markets started trading on a mixed note, as you can see, with London FTSE down 0.25 percentage point, but the rest of Europe fairly in the rally mode, including Milan, where businesses are keeping an eye on Xi Jinping's visit. Earlier in Asia, shares ended the day in positive territory as investors looked ahead to a fresh round of trade talks between China and the United States starting next week. Internet giant Tencent dropped in Hong Kong this Friday, a day after it reported lackluster quarterly results. On Thursday, the company said its net profit plunged 32% in the final quarter of last year, and that it saw the slowest annual profit growth in 13 years. The tech firm is looking to reduce its reliance on online gaming in China, where a freeze in new game approvals is preventing it from making money out of its most popular games. And that's it for business for now.
Thank you very much, Yuka. Yuka Roye with a look at what's making business headlines.